Welcome back, my friends. The news today is that sales of luxury goods are collapsing. World's largest luxury group LVMH slumps 4% after second quarter revenue miss. Shares in LVMH fell on Wednesday after the luxury group on Tuesday released its earnings for the first half of 2024. Sales came in at €20.98 billion, $22.7 billion in the second quarter, lower than expected by analysts surveyed by LSEG. Sales in Asia, excluding Japan, fell 14% in the second quarter from the same period a year earlier, LVMH said. Burberry shares dropped 16% after the luxury giant issues profit warning and replaces CEO. Burberry said that if the recent trading slowdown continues, it expects to report an operating loss for the first half of this year and full-year operating profit below current consensus. Shares in the 168-year-old British luxury giant closed 16.08% lower in London. The company also suspended its dividend and named Joshua Schulman, formerly of Michael Kors and Coach, as new CEO, with Jonathan Akeroyd to step down with immediate effect. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Shares in the world's largest luxury group, LVMH, fell on Wednesday after its second quarter sales came in below analyst consensus on Tuesday. LVMH stock was last down by 3.86% at 2:02 p.m. London time. Other luxury sector names, including Gucci owner Kering, which is set to report earnings Wednesday, also retreated. Sales were €20.98 billion, $22.7 billion in the second quarter, compared with the €21.6 billion LSEG analysts were expecting. Sales in Asia, excluding Japan, fell 14% in the second quarter from the same period a year earlier, LVMH said. The company's sales in the region had declined 6% in the first quarter of 2024. Meanwhile, sales in Japan jumped 57% year-on-year in the 3 months to the end of June. Across the first half of the year, sales in Asia excluding Japan dropped 10% compared with the first 6 months of 2023, while sales in Japan rose by 44%, LVMH said. The company said the exceptional growth in Japan across the first half of the year was boosted, in particular from purchases made by Chinese travelers. Japan was among the strongest regions for the fashion and leather goods, perfumes and cosmetics, and watches and jewelry divisions over this time, LVMH added. By business groups, wine and spirits revenue fell 5% in the second quarter of 2024 from a year earlier, and the watches and jewelry division declined 4% over the same time. Across the first half of the year, Europe, the United States, and China were the regions most affected by lower consumer demand in the wines and spirits division, LVMH noted, adding that the market environment in China has been unfavorable. Weakening demand in China has been weighing on the broader luxury goods sector for several quarters, as the world's second-largest economy continues to grapple with the fallout from the COVID-19 pandemic. LVMH is the latest luxury brand to report weak performance this year, with Hugo Boss cutting its 2024 guidance and Burberry issuing a profit warning earlier this month. Shares in Burberry plunged 16% on Monday after a disappointing fiscal first-quarter performance led it to issue a profit warning, replace its CEO, and axe its dividend. The 168-year-old British luxury giant said that if the recent trading slowdown continues, it expects to report an operating loss for the first half of this year and full-year operating profit below current consensus. It also suspended its dividend and named Joshua Schulman, who formerly led Michael Kors and Coach, as new CEO. Jonathan Akeroyd is stepping down with immediate effect by mutual agreement with the board, the company added. Burberry's shares closed 16.08% lower in London. The weakness we highlighted coming into FY25 has deepened, and if the current trend persists through our Q2, we expect to report an operating loss for our first half, Burberry chair Gerry Murphy said in a trading update, describing the company's first quarter performance as disappointing. In light of current trading, we have decided to suspend dividend payments in respect of FY25. We expect the actions we are taking, including cost savings, to start to deliver an improvement in our second half and to strengthen our competitive position and underpin long-term growth. Burberry said comparable store sales fell 21% in the 12 weeks to June 29th, with retail revenue coming in at +$458 million, $595 million for the period. On a regional basis, sales slipped 16% in EMEA, Europe, the Middle East, India, and Africa, and 23% in both Asia Pacific and the Americas. RBC analysts Pyril Dadania and Richard Chamberlain said the results were incrementally worse versus the already lowered guidance in January for FY24. Current trading trends point to soft brand momentum for the Burberry brand, which in our view needs to be addressed soon enough for Burberry to contain any further market share losses, they added. The company has been battling with a dwindling luxury appetite across its major markets, with a cost of living crisis affecting its European and US customers, and economic concerns plaguing Asian consumers. We are operating against a backdrop of slowing luxury demand, with all key regions impacted by macroeconomic uncertainty and contributing to the sector slowdown, Burberry added, outlining a desire to reconnect with our core customer base. The company said it planned to focus on rebalancing its products to include a broader everyday luxury offer, refine its brand communications, refresh its website, and deliver cost savings. Famous for its trench coats, bags, and Burberry check, the company has for some years been attempting to make its brand more upmarket. Ackroyd, who previously worked at Versace and Alexander McQueen, took up the challenge in 2021, taking over from predecessor Marco Gobbetti, who launched a 5-year turnaround plan in 2017. Luxury goods sales are not collapsing, but they are experiencing a slowdown. According to a recent study by Bain & Company, the post-pandemic surge in global sales of luxury handbags, shoes, and apparel is expected to stall this year. This is due to a combination of factors including a creativity crisis, price hikes, and a shift in focus towards the wealthiest customers. However, it's important to note that the luxury goods market had been recovering strongly from the pandemic, with significant growth in 2023. The current flattening of sales is more of a stabilization rather than a collapse. Burberry decided to cut its dividend due to a combination of disappointing financial performance and a challenging market environment. The company issued a profit warning and reported a significant slowdown in sales, which led to expectations of an operating loss for the first half of the fiscal year. Additionally, Burberry replaced its CEO as part of its efforts to address these challenges. The decision to suspend the dividend was made to help the company navigate through this period of financial difficulty and to focus on cost-saving measures. Whether luxury goods are worth buying depends on your personal values, financial situation, and what you hope to gain from the purchase. Here are some factors to consider. Here are some of the reasons for buying luxury goods. Quality and craftsmanship. Luxury items often boast superior materials and craftsmanship, which can mean they last longer and perform better than cheaper alternatives. Status and prestige. Owning luxury goods can provide a sense of accomplishment and elevate your social status. Investment potential. Some luxury items, like high-end watches or limited edition handbags, can appreciate in value over time. Exclusivity. Luxury brands often produce limited quantities, making their products rare and exclusive. Here are some of the cons of buying luxury goods. High cost. The most obvious downside is the price. Luxury goods can be significantly more expensive than their non-luxury counterparts. Financial burden. If not managed well, purchasing luxury items can lead to financial strain or debt. Depreciation. Not all luxury items appreciate in value. Some may lose value over time, especially if they fall out of fashion. Here are some other considerations. Personal satisfaction. If owning a luxury item brings you joy and you can afford it without financial strain, it might be worth it for you. Resale value. Research whether the item you're considering tends to hold or increase its value over time. Alternatives. Sometimes non-luxury items can offer similar quality and functionality at a fraction of the price. Ultimately, the decision to buy luxury goods is a personal one. It's important to weigh the benefits against the costs and consider your own financial situation and priorities. Not all luxury goods are cheap Chinese fakes, but counterfeit luxury items are indeed a significant issue. Many luxury brands face challenges with counterfeit products, which are often produced in China and sold at a fraction of the price of genuine items. These fakes can range from low-quality imitations to high-quality replicas that closely resemble the original products. Here's how to spot genuine luxury goods. Price. If the price seems too good to be true, it probably is. Genuine luxury items are rarely heavily discounted. Quality. Authentic luxury goods are made with high-quality materials and craftsmanship. Look for details like stitching, hardware, and materials. Packaging. Luxury brands often have distinctive, high-quality packaging. Counterfeit items may have packaging that looks cheap or generic. Serial numbers and certificates. Many luxury items come with serial numbers or certificates of authenticity. Verify these with the brand if possible. Authorized retailers. Purchase from authorized retailers or directly from the brand to ensure authenticity. Here are some of the reasons why people buy counterfeits. Affordability. Counterfeit items are much cheaper than genuine luxury goods. Accessibility. Fake luxury items are widely available online and in certain markets. Desire for status. Some people buy counterfeits to achieve the appearance of wealth and status without the high cost. What are the risks of buying counterfeits? Legal issues. Purchasing and selling counterfeit goods is illegal in many countries. Quality. Counterfeit items often lack the quality and durability of genuine products. Ethical concerns. The counterfeit industry can be linked to unethical practices, including poor working conditions and intellectual property theft. If you're considering buying luxury goods, it's important to do your research and buy from reputable sources to ensure you're getting the real deal. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.